We begin then with the International Monetary Fund's warning that the world may soon sink into a recession. Inflation is expected to remain high, which could also lead to a tightening of global financial controls. The IMF also lowered its earlier 2022 growth forecast for the global economy, saying many downside risks have materialized. It says COVID-19 as well as the war in Ukraine are largely to blame for this downturn. Our Eum Ji-young starts us off.
Gloomy and more uncertain. That's how the International Monetary Fund described its latest World Economic Outlook report. The Washington-based institute cut its world GDP growth forecast for this year by 0.4 percentage points from its previous projection in April. Its new outlook is 3.2%. The chief economist at the IMF says with inflation expected to remain stubbornly high, the outlook has darkened significantly since April.
The world may soon be teetering on the edge of a global recession, only 2 years after the last one. Multilateral cooperation will be key in many areas, from climate transition and pandemic preparedness to food security and debt distress.
He says many of the downside risks that the fund identified in April are now materializing, adding that a number of shocks have crushed the global economy already weakened by the pandemic.
Higher than expected inflation, especially in the United States and major European economies, is triggering a tightening of global financial conditions. China's slowdown has been worse than anticipated amid COVID-19 outbreaks and lockdowns, and there have been further negative spillovers from the war in Ukraine.
The revision is mostly due to sizable projected markdowns for the world's largest economies. The U.S. economy is expected to grow by just 2.3% this year. That's 1.4 percentage points down from the previous forecast. The IMF said the cut reflects a series of drastic monetary tightening measures and a weaker than expected consumer spending, adding that the U.S. has a very low chance of avoiding a recession. China's outlook was lowered by 1.1 percentage points to 3.3%. The IMF said its calculation was based on the continued spread of financial stress in China's real estate sector and its COVID-19 lockdowns. Among the major economies, South Korea's downgrade was relatively small, a cut of 0.2 of a percentage point from the previous projection to 2.3%.
There was a smaller cut in the growth rate than other major economies like the US and China because of South Korea's solid exports, including semiconductors.
Although not stated in the report, South Korea's finance ministry says the government's latest supplementary budget likely had a positive effect on the IMF's moderate revision. Eum Ji-young, Arirang News.